crypto markets ended the week balanced between resilience and restraint. Bitcoin traded between $109,000 and $113,000, while Ethereum held near $4,000. Despite early weakness, both assets recovered midweek as liquidity improved and funding stayed calm. Volatility contracted further, suggesting pressure building beneath a surface of composure. Across trading desks, the tone was measured but watchful. Analysts described the environment as one of quiet positioning, investors adding selectively rather than chasing movement. Institutional desks noted steady flows into long-term holdings, while retail activity remained light. The consensus: this is still the breathing phase of the cycle, not a new trend. Macro conditions offered mild support. Recent inflation data came in broadly neutral, and central bank officials signaled no immediate policy shift. That backdrop kept risk sentiment stable across global markets, allowing crypto to consolidate alongside equities. The dollar's minor retreat helped sustain confidence, though trade headlines occasionally stirred intraday volatility. Structurally, internals continued to strengthen. Funding rates hovered around zero, open interest climbed gradually, and option skews flattened as traders closed protective hedges. This normalization shows that leverage is balanced and forced liquidations remain unlikely, a healthier setup than the crowded position seen in early October. ETF and ETP flows added quiet reinforcement. Creations again outpaced redemptions, underscoring persistent institutional participation even as daily volume thinned. That slow accumulation provides an invisible floor, patient capital absorbing supply while speculation waits for confirmation. Technically, Bitcoin's support zone between 105,000 and 110,000 stayed firm through multiple retests. Resistance still caps the market near 115,000, marking the threshold for any breakout. Ethereum reflected the same rhythm, holding its base near 4,000, but unable to push decisively higher without renewed momentum. This symmetry across majors keeps sentiment neutral, neither euphoric nor fearful. Derivatives data reinforced that balance. Low realized volatility and dense gamma positioning around at the money strikes created a narrow trading corridor. Once those hedges decay, volatility could expand quickly, direction unknown, but tension unmistakable. Rotation among tokens was selective. Layer 2 and infrastructure assets saw modest inflows, while high beta meme coins and gaming tokens fluctuated sharply before retracing. This divergence shows capital discrimination returning to the market, a sign of maturing sentiment after months of excess. Speculative Corner, for the Deegans among us. Short-term traders found brief excitement midweek as smaller exchange tokens spiked 20 to 40% on rumors and reversals. Funding jumped temporarily on a few perpetual pairs before cooling just as fast. It's the same rhythm each cycle. Volatility seeks attention, liquidity seeks safety. Smart money watches both. The takeaway for the week: pressure without panic. Crypto remains compressed, patient, and technically stable. The absence of fear is not complacency, it's preparation. When volatility returns, it will test conviction on both sides, and the groundwork built during this calm will determine who's ready to act. For more insights on Bitcoin, Ethereum, and the forces moving the crypto markets, remember to like, subscribe, and keep learning, here at Crypto in Black and White.